Hey guys, Boris Haas from VK Forex. Welcome to our Forex Daily Technicals for 10/24/13. As always, trading foreign exchange on margin carries a high level risk matter to be suitable for all investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. Well, definitely been a consolidation day for most of the currencies today, with one exception being the yen. Let's just take a look at the euro first. Just bear with me here. Sorry. Let me pull up the euro. The euro definitely continues to consolidate here, raring to go through the 138 level. But the longer we stay here, the longer we don't penetrate it, the more likely we could see this kind of a consolidation pattern where we just sort of drift sideways for a while until we get further impetus to the upside. The fact that we broke out to fresh yearly highs still remains a positive point, and the fact that we've been able to stay above the 3,700 still continues to very much stay in the favor of the euro. But we do need to take out the 38s in order for us to have any forward progress. But a takeout of 38s does open up the ultimate run towards the 140s. So very important to look at these levels as the night progresses to see if we can get the push higher that's needed. If we can't, if we get a turnaround here, this could be essentially a very, very awkward but nevertheless possible. Let me just go to the weeklies and show you. Just a very kind of awkward but a possible higher double top formation. So be wary of that. But for now, it still looks very, very bullish. And I think a push higher through the 38s does put us on track towards this 4000 level, which is the next big level of resistance in the euro. Well, the one thing that did come back down was dollar yen off of this story. Let's go to the dailies. Off the story of Chinese banks writing off much larger loan reserves, putting the whole notion that China may be in danger of a big credit contraction. Tonight we have the Chinese PMI. That should be interesting because if that number comes in negative, that would really, really exacerbate these fears of a China slowdown and put further pressure to the euro. For now, further pressure to the dollar yen. For now, this 96.50, 97 corridor is very, very critical support level. If we can hold that, that still keeps the yen in a mildly neutral position. But if we start breaking the 96.50, that really opens up a run all the way out to a possible double test of the double bottom of 94s. In the meantime, 98 now is resistance, and higher above that is of course 99. So we have to watch it. If you look at it very carefully, you can still make a mildly bullish case that that the yen, I keep saying the euro, that the yen continues to make higher lows, and at this point, as long as it holds above this 97 level, it will maintain that posture. But we really do need to see a comeback off these lows over here and rally back up to 98 to recover a lot of the momentum that we had just a couple of days ago. Cable, sort of again petering out in my opinion, and this is really interesting. Cable really showing very, very strong signs of flagging momentum here at the 62.50 level. This is the second time we've kind of run through it, second time we're getting rejected. The key thing here is 61 is of course the first level of support, and then the really big level of support is the 59. So we have to watch and see how well it consolidates. But if cable starts to drift lower and drift down, the second run to the downside could be the one that cracks the 59 and pushes us back towards the 58, 57 levels to the downside. On the other hand, if we can muster some strength and we take out the 62.50s and close above that towards the 63s, that really does open up a much better run towards the 65s. Here's the longer term chart on the weeklies, and you see how difficult this whole area is. This whole 62, this is basically weeklies. The 61 to 63 corridor is a flame out zone, and it continues to be a flame out zone. If you're playing probabilities, it's obviously a better fade than it is a trend at this point. And that's what cable is pretty much showing you right now. Lastly, Aussie had a big smackdown yesterday. Let's take a look at this actually on the daily chart, because this was a very, very ugly trade. Look at this. The daily candle is basically a bearing engulfish where you take out the highs, end up at the lows, and that generally tends to be a very negative signal. It tends to be, first of all, a turn signal and a negative signal. There may be a situation today where we get a little bit of a bounce back if Chinese data is positive, but if the lows here go, this 96s go, around 96 level, and the lows goes, it really opens up a run all the way out to 95s as we basically set in a near-term top in Aussie. So that's kind of how everything shapes up here. Aussie looks like it's on a cusp of a turn to the downside. Yen hanging on by a thread, and Euro looks like it wants to break out to the 38s, but not able to muster the move. While cable basically looks like it's run out of momentum at the 61 at basically the 6200 level, and is much better fade than it is a trend play as far as it goes. Wishing you guys the best of luck, the best of trading. Support Stocksbroker over and out.